Hello out there, this is Eugene Newcomb at Ideal Ideation. This video is going to be about how to build an ideal money-making stock watch list for those of you who are investing or who want to start investing. And I think everyone should invest if they're not. I have a good friend that used to say, you can't get started till you get started. So if you can afford to put away even $100 a month into a stock account and buy stocks, it's going to pay off in the end if you use the right strategy. And I believe the strategy I use is the right strategy. What is the right strategy? A strategy that makes money. Right? So any other strategy is useless. The whole point to stock trading, buy low, sell high. That's what we're going to concentrate on doing in building our watch list. Very first rule, though, for any investors is never invest any money you need to pay your bills. It's a really bad idea. I can tell you right now, once you buy a stock, it won't always go up, right? It may, in fact, let me tell you, it's kind of like an unwritten rule when I buy stocks that often they, in fact, go down right away. And they love to make me, pull my hair out. Ain't that much of it left either. But anyway, so that's the first rule. So let's go ahead and let's go and build a watch list. Now, I use Schwab and I use some other accounts, but I like this one best to do research. So let's go ahead and jump right into it. Let's create our watch list. So I'm going to create a watch list called Wow. So now what I want to do is go do some research because we're going to have to do some research to add. I'm going to put that in a new tab, right? And because US markets, that's what we're interested in. So I'm going to scroll down, going past all this nonsense to this, the movers section. And so I'm interested in what? Buying stocks low. So that's what you do here. Go down where it says 52-week lows. I'm going to go sector by sector for all exchanges. It's an easy way to do it. There's really not that many stocks that are often at lows. But we're going to look at one. Here's a couple. And both of them seem to have, the first one has enough volume. So let's go ahead and take a look at this very first one to see if it's something that we like. One of my other rules is volumes. You see this second one only has 43,000 shares traded today. I wouldn't be interested in that stock. Typically, I buy stocks in 10,000 share blocks. And for me, that's not enough volume. There was a time when I was learning about trading where I had bought some stocks with very low volumes. And when I went to sell them, they wouldn't sell. I mean, they finally did, but not when I really wanted them to, right? So I learned my lesson. I don't buy anything with low volumes. In this particular case, let's say you only had enough funds to where you could only buy, 1,000 or several thousand shares. Well, then this stock may be something you'd be interested in, but I'm not. So, but this first one, almost 3 million shares a day. That's something worth. I'm going to open a new window here and let's take a look. Right. One of my second rules is I don't buy anything that does not pay a dividend. But also, I'm noticing something else. Is the history of volume. I don't know how long this company's been in existence, but notice sometimes it doesn't have higher volume, so I would be worried about that. But they don't pay dividends, so I'm not interested. I only buy stocks that pay dividends. And why is that? Again, through that learning process, I had bought some stocks that when I first bought them, they didn't go up, they went down, and they didn't pay dividends. And I had to hold those for some times. I don't sell stocks at loss. So I hold them until they finally make me some money, or at least break even. So there was a stock I had to hold on for like 4 years. And during that time, that money was tied up in that stock. I didn't get any dividends. I mean, I'm not doing that again, ever, right? So one of my other rules is it has to pay dividends. Just in case it goes down, I want money, right? Well, so I wouldn't be interested in this stock. But there's another element of this research page that I like, which shows peers in comparison, right? And is there anything here that pays? And look there's some stocks here that pay decent dividends. And notice these are all oil companies, so they're probably making good money. But I routinely don't look at any stocks that have high share prices. Well, first of all, because I can't buy that many shares in comparison to lower price stocks. I like stocks anywhere from $10 to $30 range is my favorite because I could buy tons of shares. So these, although they wouldn't be out of the question, I already tell you they're not at a low. These are all oil companies, and they're probably doing quite well, although they'll all pay dividends. Let's look at the one with the best dividends. Let's look at Chevron, right? And if we look at, and we're going to take this one out already, if we look at Chevron, notice it's near a 52-week high. Again, it's since the Iranian conflict and all the threats and war and whatnot. Notice, of course, it's went up quite a bit, right? So, but I'm not interested in this because it's not anywhere near a low, right? I'm not going to make money on this in at least now, unless it continued to go up, and I'm not interested. It's not going to make me enough either way, right? So I don't even look at stocks like this. So let's just close those windows and let's continue to look, right? So again, this other one, not enough high volume for me to mess with. Okay, so here's one. Look at this. It's 2.8. Okay, volumes, not interested. And if you do this every day, at the end of the trading day or on the weekend, but again, if you do it every day at the end of the trading day, that's a good way to build up a lot of stocks, right? So, all right, here's this first one, right? This looks possible, right? I like to see where let's say you bought it here and ended up could sell it there. I mean, you're going to double your money, all right? I like that. Volume's good enough. Let's just take a look. And let's go ahead and go down and see if it pays dividends. It does not. Again, I'm not interested in this company. And I can see that it does have some interesting aspects of its chart, but I'm just not interested in a stock that doesn't pay dividends. Just don't do it. Looks like it's making money. I don't care about that. Let's look at some of its peers that pay a dividend. All right, here's one that seems to pay an okay dividend. So one of the things that happens if you look at these comparison charts is you might often find a company that is in the same category, near a low, and this one pays a dividend. So let's take a look at it. See if it looks like something I might be interested in. Again, it is near a 52-week low, which is good. 61 5-year chart. Oh, the chart looks fabulous. And what do I like about this chart? Notice it routinely goes down and up. This is a 5-year chart. You could see many downs and ups. And what I call this is the perfect rhythm. And I actually have a watch list that I call the perfect rhythm that I will add this stock to. Right? At least initially. Right now, I wouldn't add it because I'm doing some more research. So now it has, and let's look at this rhythm. If you look at here, you could have bought it in October 2021 and at, around 60-ish, and you could have sold it for 20-some, looks like a 25% gain in a matter of a few months, right? And here's another place where it went down into the 50s and you could have sold it into the 70s. And again, another 25-30% gain. And here you could have bought it again here or here into, again, the low 60s and sold it in the 70s. So you might have been able to make a decent gain there in a short amount of time, and bought it again just a few months later, and again sold it. So this rhythm is a great rhythm. And if you have enough stocks like this on your watch list, for example, if you sold it, let's say you sold it at this spot, right? Okay, now you have a profit. You made a good amount of money. And if you have other stocks that are similar to this, they may be at a low to where they're at the low end of that rhythm, and you can take your money you just made and throw it right into another rhythm bearing stock. Again, my favorite type of stocks. So I always, typically almost every one of my buys happen to be in that category. Not all, but certainly when I sell, often there's one in the rhythm category that is at a low and ready to buy, right? So, and there's some stocks over the years that I bought them repeatedly, right? My favorite stock, which I'll make a separate video on some of my favorite stocks, but my favorite stock I bought 5 or 6 times over the last 5 or 6 years, and each time made a lot of money. Matter of fact, in the last 2 years on my favorite stock, I made pretty near $1 million on that one stock. So, and there's lots of stocks to buy, right? So anyway, so this is great so far. So let's go down a little down. It pays decent dividends. Again, better than a sharp stick in the eye. So, even here, if you just do the quick math, if you bought 10,000 shares of this stock, and it pays, you'd get about $14,000 a year in dividend. Again, that's a lot of money, right? So I'd be happy with that. Now, if we go down and look, I like to look at the last 12 quarters when I look at this. And if you look, it's making money all 12 quarters. So now, did they always hit their mark, right? Here you notice they call it a miss, right? Here's a beat. Here's a beat. I do like to see beats, right? And if you look, here's another miss, beat, 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 beat. So it looks like most of the time they beat the analysts' forecasts. So this is, but I'm not all that interested in that. What I'm more interested in, how profitable are they, right? So I I like the AI search they have nowadays. Here I have, I already have the search here, and I'm going to copy that and bring it down into that window. And this particular stock is, let me see what its name, this is AOS. So AOS. I want to know, at least for the last 10 years or so, have they, and it looks like they have been making money well. And if you just look all the way from 2015, wow, doing really well. And if you look, they also, and you look at near the COVID years, they didn't make a lot, but they're up into the 500 million, right? So, right, no, I like this stock. This looks a lot. It would certainly go on my watch list, and this would probably make us lots of money. So I'm going to go to my watch list, and we're going to add AOS to our list, right? So let's find one more, and then I think you get the idea. So here, not enough volume. I'm not interested in any of these. They just don't have the type of volume I'm interested in. Okay, here is one. Let's go ahead and take a look at this very first one on the list. Oh, let me close this window. All right, so let me go and look. And so remember, the first thing for me is I go look, do they pay dividends? They do. All right, so that's good. They're at a low volume, 14 million. Let's see if looks like they have good volumes. Wow, so it looks like I do see a rhythm here that looks interesting. Mid 30s or so. Looks like we can make the better part of $10 a share on these ups and downs. Not bad at all, especially considering they're way down at the low right now. So this looks like an interesting one. Pay a decent dividend. Earnings seem to be going down. That wouldn't bother me that much. Let's look at the last 12 quarters. See, I do see some misses here that they do have some beats also, even though that is somewhat concerning. Although this doesn't take it off the list. So let's TSCO. Let's take a look at this one. TSCO. This is likely making money during that whole time. Just looking at the last 3 years. Yep, they've done well. In fact, it's the type of company I really like to see. Look at from 2015 into 400 millions, and it looks like they've been going up. Wow, not bad. I like this company. So I would add this to our watch list, TSCO. So, and we just add that symbol, TSCO. Right? And so here we have a couple companies on our watch list. They pay dividends. They're both all profitable companies. And what I'm telling you here is what's not to like. You should be able to build a watch list. And notice we just spent, 20-30 minutes, and we were able to build find two stocks at lows that will likely go up at this point, and a couple of them, look at this one, has a chance to double. Right? I love those. Right? Even if it doesn't get near that, and if you could put, a few dozen stocks on your list. At any one time, when you make a sell, there may be something ready to buy. So that's how you build a watch list that will make you money. And it's fairly low risk. Just remember, don't invest any money you don't need. Stocks that pay dividends, stocks that are profitable. And really, that's all there is to it. And I routinely make money at all of these. I don't, it's not nowhere near recent memory for me even losing any money at all. So I think that if you follow the strategy I just outlaid, even if you start with a few $1,000s, you'd be surprised within the next 4 or 5 years how much money you can build up. And for those of you who have more than a few dollars and that don't know really what to do with or are afraid to go in the market, I just showed you a way that really is pretty reliable on making money. So don't hesitate. Like my good friend said, you won't get started till you get started. And okay, that's all I have to say. I'll be having some more stock videos for different areas, and I'll give you some pointers on some of the stocks I love. And that's all I have to say for this particular video. I'm out of here.